Is it possible that the stock is flashing strong sell signals across every chart, yet the smartest money in the room is quietly calling it a massive buying opportunity? Right now, everyone is staring at United Microelectronics Tokenized Stock, ticker UMCon, as it hovers around $25.76. It is barely moving, up a tiny 0.02% over the last 24 hours, and the retail market is completely panicked. But if you only look at the surface panic, you are missing the entire chess game being played behind the scenes. Let us look at exactly what this tokenized asset actually represents. We are talking about United Microelectronics, one of the massive cornerstones of the global semiconductor foundry business. They manufacture the critical chips that power everything from your smartphone to the display screen in your car. But what makes this asset unique and why it is in sharp focus today is that this is the tokenized version backed by Ondo. It bridges traditional real-world technology equities directly into the decentralized finance ecosystem. It allows liquid 24/7 trading and on-chain collateralization of a major global tech giant. Yet, despite the massive importance of microchips in our modern economy, the price action on UMCon looks incredibly heavy. Before we dive into the charts, take a second to hit that like button, subscribe to the channel, and leave a comment below with your exact price target for UMCon. It heavily helps the algorithm and keeps these deep dives going. If you open up the technical charts for UMCon right now, the short-term picture looks undeniably weak. We are looking at a clear, defined downward trend characterized by a series of lower highs and lower lows. The immediate momentum indicators are pinned firmly in bearish territory, showing that the sellers are in complete control of the current price discovery. When you look for key support levels, the $25 mark is the psychological line in the sand that the bulls are fighting desperately to hold. If the price breaks cleanly below $25, the next major historical structural support does not kick in until much lower, which is creating a lot of anxiety for short-term traders. On the flip side, any attempt to rally faces a mountain of overhead resistance near the $26.50 level, where previous buyers are looking to break even and exit. This technical weakness is exactly why the technical ratings and automated trading signals are flashing a unanimous strong sell. The short-term moving averages have crossed below the long-term moving averages, creating a classic bearish alignment. Momentum oscillators are showing that while the asset is reaching oversold conditions, a structural trend reversal has not even begun to form. The immediate short-term outlook remains highly defensive, and the path of least resistance still points lower until a definitive accumulation floor is built. This creates the ultimate debate that splits Wall Street and DeFi traders down the middle. Is this asset deeply undervalued, or is it a classic value trap? The bears look at the collapsing trend and argue it is a dangerous trap. They point out that retail traders constantly get trapped in these setups because they try to catch a falling knife, buying simply because the price is lower than it was last month, without waiting for a market structure shift. The downside risks here are amplified by the volatility of the broader crypto market, which can drag tokenized assets down, regardless of the underlying company's true value. But let us look at both sides of the coin. The bull case rests entirely on a long-term value recovery scenario. If global chip demand experiences a down-cyclical upswing, or if macro liquidity floods back into DeFi assets, UMCon could rapidly snap back to test its previous highs, rewarding patient accumulators who bought the blood. The bear case, however, warns of a painful continuation lower. If the global economy slows down and chip inventories build up, institutional sellers will keep dumping, forcing UMCon to break its key support and flush out the remaining retail buyers. In the short term, the outlook remains highly uncertain and volatile, demanding extreme caution as the market searches for a true bottom. Long term, the underlying fundamentals of the semiconductor industry will eventually reassert themselves, but the timeline for that recovery is completely unknown. So we are left looking at a chart that says, get out immediately, while the core value screams that a bottom must be close. Is this a final fire sale before a massive institutional rally, or are we about to watch the flow completely drop out?